Musk launches Nasdaq listing, panoramic analysis of SpaceX's prospects and global financial changes. Just yesterday, on the 12th of June 2026, Elon Musk officially launched his space empire SpaceX on Nasdaq, raising $75 billion, setting a record for the largest IPO in human history. But if you think this is just a story about rockets and stock ticker symbols, you're missing a crucial signal. Behind its valuation of nearly $1.8 trillion lies not only a dream of reaching for the stars, but also the beginning of a superstorm that will completely change the flow of global funds and reshape the financial landscape for the next decade. Today, we will give you a complete analysis of the entire picture of this storm and the core question it raises. Is this a ticket for all mankind to sail to the stars and the sea, or a carefully designed, unprecedented wealth transfer? First, the core question. How exactly is a figure of nearly $1.8 trillion, which is larger than the GDP of many countries, supported? Many would say it is all thanks to Musk's dream of Mars and that Starship poised to send humanity to another planet. But if you actually look at the prospectus for this IPO, you'll find an answer that is closer to the true nature of the capital market. Within this nearly $1.8 trillion valuation edifice, dream and the reality are clearly separated into two parts. The dream is a Starship and Mars colonization plan. They are the absolute protagonists of this story and the valuation amplifiers that attract global attention. They represent infinite possibilities, a kind of option pricing for the future. But seasoned investors in the capital market understand that dreams alone are not enough. Any sky-high valuation must have a solid anchor. SpaceX's anchor is its real-world business. This mainly consists of two parts. First, there's the Falcon rocket business, which has almost completely dominated the global commercial launch market. When your launch cost is only a fraction of your competitors, you control the elevator to space and have extremely strong bargaining power. While the claim of complete control over pricing may be an exaggeration, its market dominance in the commercial launch sector is undeniable, forming a strong competitive advantage for the company. But even more crucial than the launch business is the second real-world business, Starlink. According to the data presented to the market in the prospectus, Starlink achieved a revenue of over $11.4 billion and a considerable operating profit in 2025. This document proves to the market that Starlink is no longer a money-burning dream, but a subscription business that is already self-sustaining, described as stable, high-margin, and with quasi-utility attributes. It's like a global telecom operator deployed in low Earth orbit, generating a steady stream of cash flow. Therefore, SpaceX's valuation logic presented to the market is very clear. Using Starlink and its launch business as the two cash cows as the basis for valuation, providing a safety net, and using Starship and Mars exploration as the two dreams, as the multipliers for valuation, opening up room for imagination. This is a typical capital story of reality, as the foundation dreams, as the driving force. But there is also a newest and most dangerous variable in this story, AI. This leads to our second question. Why now? Why has Musk chosen to take his crown jewel to the public market in the middle of 2026? If it were simply for money, the answer would be far too simplistic. The answer is far more complex. On the surface, going public is obviously for the purpose of raising funds. The massive $75 billion funding could greatly accelerate the development of Starship and the deployment of Starlink satellites, providing ample ammunition for the ambitious Mars program. But beneath the financing needs lie at least three deeper layers of capital logic. The first layer is locking in high valuations. Over the past few years, SpaceX valuation in the primary market has skyrocketed, but that has always been an internal pricing among a few top venture capital and private equity firms. Through this largest IPO in history, Musk successfully transformed what was considered an astronomical price by a select few into a market price backed by the global public market. This not only provided a clear and efficient exit channel for early investors, including himself, but more importantly, it solidified this extremely high valuation level, making it a solid foundation for subsequent capital operations. The second layer is building a capital ecosystem. We need to pay attention to a key narrative shift. According to market analysis, Musk's other company, XAI, was already integrated into SpaceX's future blueprint in the strategic narrative as early as February 2026. Although not explicitly stated in the prospectus, it is implied that SpaceX will not only be a space company in the future, but also a space plus AI complex. A bolder idea has even begun to circulate in the market, leveraging Starlink's global coverage to deploy a satellite-based AI computing network in low Earth orbit. This narrative undoubtedly opens up another dimension of imagination for SpaceX valuation. After going public, SpaceX will become a powerful capital platform, which can in turn provide funding and endorsement for the development of its sister companies, such as XAI, forming a powerful Musk-affiliated capital closed loop. The third layer, which is perhaps the most realistic, is optimizing the capital structure. Both Tesla and Musk personally face complex debt and equity pledge situations. A successful mega IPO can significantly improve the financial health of the entire ecosystem and provide greater flexibility for future capital operations. Therefore, this IPO is not only SpaceX's coming-of-age ceremony, but can also be seen as a key capital restructuring of Musk's vast business empire. Only when we understand the valuation structure and capital motives can we truly grasp the core impact of this IPO. How will it change the global financial landscape? This is no longer just a question of one company, but a question of global liquidity. The first direct impact is the global liquidity siphon effect that analysts have been discussing. Imagine a fundraising demand of $75 billion coupled with a massive market capitalization of nearly $1.8 trillion after listing. It's like a giant gravitational field that will inevitably draw a large amount of liquidity away from global capital markets. This money could come from other tech stocks, blue chip stocks in traditional industries, or even stock markets in other countries and regions, such as Europe and Asia. For a global market already in an environment of high valuations, strong differentiation, and liquidity sensitivity, this is undoubtedly a huge stress test. The second, more profound impact lies in the reshaping of the index. Given SpaceX's size, the market generally expects it to be included in the Nasdaq 100 index in the future, while inclusion in the S&P 500 index is unlikely to happen immediately due to its stringent profitability requirements. Simply being included in the Nasdaq 100 index means that trillions of dollars of passive funds tracking these indices globally may be forced to buy SpaceX stock in the future. This will further drive up its stock price, creating a situation where it is too big to pass up and may exacerbate the trend of capital concentrating on a few mega-cap technology assets. Third, and most importantly, it may mark a turning point in an era. Over the past 2 decades, the most successful stories in the global capital markets have been those of internet companies based on business model innovation, such as Google and Facebook. They connected information and people in a more efficient way. SpaceX's IPO, however, may be heralding the arrival of a new era, the era of hard technology. These companies are characterized by long R&D cycles, huge capital investment, and extremely high technological barriers. They are no longer optimizing the existing world, but creating an incremental world, such as in space exploration, artificial intelligence, and life sciences. From an analyst's perspective, SpaceX, with its record-breaking valuation, has set a new benchmark for all these hardcore technology companies. It seems to be telling the capital market that it is worth paying a high premium for the underlying technologies that will truly change the future of humanity. This could be a paradigm shift in valuation systems, with an impact far exceeding SpaceX itself. So let's go back to the original question. Is SpaceX IPO a ticket to the stars, or just a game of wealth transfer? The answer is probably both. For Musk and early investors, this was a celebration of locking in a trillion-dollar valuation and realizing wealth growth. For the capital market, this is a huge challenge to test liquidity and reshape the index landscape. For ordinary people like us, this is more like a clear signal. Global capital preferences are undergoing a profound shift, possibly moving from asset-light business model innovation to asset-heavy core technologies. Therefore, SpaceX listing is not just a milestone for Musk's space empire. It is more likely the opening ceremony for a new era of hardcore technology pricing in the global financial market. In this grand transformation, each of us, whether or not we participate, will be profoundly affected. Regarding this unprecedented shift in capital markets, what do you see as the biggest opportunities and risks? Do you think the nearly $1.8 trillion valuation is a bubble or the beginning of a new era? Leave your thoughts in the comments section and let's discuss.